Libra Energy Materials is an explorer and developer of critical mineral projects. Libra's Flanders North, Flanders South, and SBC projects in Ontario are being explored under a $33 million earn-in deal with KoBold Metals Company. In addition, Libra has 100% ownership in 4 lithium projects in Ontario and Quebec, as well as 21 lithium projects, 8 graphite projects, and 1 cobalt project in Brazil, an emerging critical minerals hub. We've got CEO Koby Kushner here to walk us through the company's extensive project portfolio and its overall strategy for its ongoing development endeavors. I'm Martin Gagel with Market Radius Research. Please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Koby, great to see you. Welcome.
Likewise, Martin. It's a pleasure to be on your show for the first time ever.
All right. All right. You've got your deck here. You've got a lot of projects on the go. Why don't you walk us through this story and we can see what Libra is all about?
Yeah, let's get to it. I will start. I encourage viewers to pause the video and take some time to read all this fun stuff right here. So why Libra Energy Materials? We're one of the largest grassroots explorers that not a lot of people have heard about. We're unique in that we have this earn-in agreement with KoBold Metals. To my knowledge, there's only 2 public companies that have such a deal in place. Something that makes us unique as well is our structure of our company. It's a very pristine cap table. Management and insiders, directors own roughly half of the cap table, and we're in this what we like to call the founders lockup agreement, which I will touch on shortly. Lithium's had quite a run, and not many people are paying attention, but spodumene, as of the date I'm recording this, is up about 11.5% year to date. So spodumene being the key lithium-bearing mineral, it's traded.
And sorry, Koby, to interrupt. Spodumene, that kind of bottomed out in the summertime, wasn't it? July, August, where the market kind of bottomed out. So we're going on a bit of a U-shaped curve here.
Totally, yeah. So I'll touch more on the macro and make sure everyone's up to date on that.
Yeah.
Yeah, consensus is that bottom was in June, in my view.
Oh, okay.
As well as the view of several other lithium analysts out there. And we did something very contrarian, right? And this ties into the last piece there, the consolidator opportunity. We did something very contrarian. To my knowledge, we're the first and only lithium company in 2025 to have gone public, right? Not a lot of people are pursuing the strategy that we are pursuing as a company.
Yeah.
Right now, the equities have been beaten up. A lot of lithium companies are no longer lithium companies. They pivoted off to the next hot thing. Some of these shells, companies that turned back into shells, are no longer even exploration companies. I think most of them probably pivoted off to gold or whatever the flavor of the day is. But here we are. We still believe in lithium. We think it's coming back. And our goal here is we want to make outsized returns relative to lithium prices. How do you do that? You do that by buying at the bottom of the market. So there's kind of 3 aspects here. The strategy, we think it makes sense. We think that we're the right team for the job to pursue that strategy, and we think we're the right vehicle to pursue the strategy. So this is a macro side that not a lot of people really seem to focus on, but this is global exploration spend over time. Gold is up here in turquoise. Whether you're in a great gold market or a bad gold market, gold usually seems to attract the most exploration funding. We've been searching for gold for millennia, right? It's become a lot harder to find new grassroots gold deposits. Same with copper. They're becoming more and more scarce. Lithium, we've been exploring for only 10 years. Approximately 10 years, that's it. So the idea here is we think there's a lot more low-hanging fruit out there. The other thing is that there hasn't been much grassroots exploration initiatives targeted towards lithium. Yes, there was a lot in 2022. I would argue most of that money was probably somewhat flushed down the toilet. That's what happens in hot markets. The promoters come out, they chase wherever they can raise money. What we saw getting funded in 2022 was a lot of companies that were kind of relying on closeology. How close are you to the nearest lithium discovery, the nearest major lithium discovery? What really matters isn't what's on your neighbor's ground. It's nice to have it, but what matters most and foremost is what's on your own ground. Why is your project prospective? We have to consider that most lithium deposits were found by accident, okay? Usually while searching for something else. Patriot Battery Metals, what was formerly known as Corvette, I'm going to butcher the new pronunciation, so I won't attempt it, but that project was a gold project in the early 2000s owned by Virginia Gold Mines. And there's a story of a geologist having his lunch on the deposit, noting some lithium mineralization and continuing on with the search for gold. No one cared about it. And Patriot was the first one to actually go and drill it off, but it really wasn't a new discovery per se. So if you consider that most of the stuff was found by accident, what's out there now if you search with purpose? And that's kind of been what we've been doing since we started the company. So we cast a wide net, we think more regionally, we ignore all closeology, we ignore all the accidents and kind of search with purpose. What's out there if you think more regionally? Where should lithium deposits occur, stake it, and explore it? And that's what we've been doing successfully. Per dollar raised into the company, we've come up with more grassroots lithium discoveries than our peers, which is something we're very proud of. There's been quite a lot of third-party validation on our discoveries as well. We've won a Discovery of the Year award. Of course, we've attracted KoBold Metals into the $33 million earn-in agreement. Also caused a staking rush, which I'll touch on all this shortly. So right now, the lithium market, as of 2023, has been in oversupply. And as a result, we've seen prices that are very, very weak. Lithium is a finicky market. It is small. Right now, demand is growing faster than supply is growing. And depending on which analyst view you want to take, the deficit is returning shortly, even amongst the bulls and the bears. So the more bearish analysts believe that the lithium deficit is coming back by 2030, which really is not that far away. And then the more bullish analysts, so that was the bears, the more bullish analysts think it's coming back as early as 2026, which is very near term. Because it's such a small market, it only takes a couple mines coming online or offline. So it's a small market that's rapidly growing very quickly. Okay. So because of that, you can have these wild price swings. It only takes a couple mines to come online or offline to be the difference between a surplus and a deficit. So to give people like any metal or commodity cycle, high prices cure high prices, low prices cure low prices. The big difference with lithium is that it's much more volatile. So when it moves a lot. In the last 10 years, 4 of those last 10 years, lithium was the worst performing metal, and 4 of those last 10 years, lithium was the best performing metal. Right now, prices are down. Typical cycles last about 2 to 3 years. Consensus amongst bullish analysts as well as bearish analysts on price forecasts, we've got a few of them in here. Consensus amongst both of them, the bulls and the bears, is that we have now bottomed in lithium. Okay, so people believe that the lithium bottom was in June. So what we decided to do was take our company public at the bottom of the market. Right, we just started trading in July. And we believe that now's the time to do it because it's uphill from here. And we've seen a lot of M&A happening. A sign of the bottom in any market, whether that's lithium or something else, is when the vultures come out to bottom feed on the week. So we saw Rio Tinto buy a top 10 lithium producer, Arcadium, for $6.7 billion US. Pilbara entered Brazil by buying Latin Resources. We've seen Sayona, Piedmont merge. M&A happens often at the bottom of the market when the vultures are preying on the weak. What we haven't really seen, though, is consolidation amongst the juniors. We've seen it amongst the majors, but not quite the juniors. And that's where we want to come in. Because even though prices have moved up over the last week and a half, the equities are still down, 80% or so off their peaks. And as I said before, a lot of these companies, these lithium companies, some of them acquired really good assets at the top of the cycle, just couldn't afford to pay the option payments on them. They entered into overly expensive option agreements. Market collapses, and lo and behold, they can't raise money to keep their projects. So the projects then go back to the vendor. The vendor has a hard time giving away these assets. Now is the time to be buying assets on the cheap for pennies on the dollar. And that's what we've been doing. So right before we execute, there's kind of three levels in terms of M&A in which we're hoping to pursue and have been pursuing. One is just staking ground. That's cheap and efficient. You don't have to pay option payments on it. And right before our go public is when we staked our Wuguchi project, for example. And as of this recording, I think we're actually wrapping up exploration now in Quebec, which is very exciting. Wuguchi is in Quebec. This project was staked over the last 2 to 3 years, and we had our eyes on it. Claims expired. We were quick to stake it. Second one would be projects that are held by a third-party vendor, where the vendor is just eager to get rid of it. Like our Stimson project. That one had a historical drill hole that made us very excited. It happens to be next door to a healthy market cap company in Power Metals. It's prospective for both lithium as well as cesium. There's some good optionality there. And we got this project. It's drill ready too. We got it for 50 grand worth of stock for 100% interest. That's it. Another one is we basically doubled our global footprint by entering into Brazil at the corporate level. So instead of buying something at the asset level, we paid for less than 10% dilution. We basically doubled our global footprint by entering into Brazil and buying a private Brazilian exploration company. So this idea of bottom market M&A, I believe it's going to prove to be very, very accretive. So that's the first part of the pitch. That's the strategy. Bottom market M&A, we're going to keep doing what we're good at, which is low cost, high impact exploration. And we think that we're the right team to do this. So I didn't introduce myself yet, but I'm the co-founder and CEO of Libra Energy Materials, mining engineer by trade. I've spent most of my career in Northwestern Ontario, a bit into Manitoba as well. I've worked in production, I've worked in exploration, I've seen projects go from exploration to construction, projects go from construction to actual commercial production. I've seen mines close down. Seeing why something doesn't work has been a very valuable part of my career. And what's very key with what it is that we're doing is we have to have that ability to screen assets quickly and know when to stop investing in a project and knowing when to walk away and prioritize the next one. We have a big portfolio. It's a lot to manage. You have to prioritize the ones that you think have mine potential and then drop the fat. Walking away from a project for a lot of companies, it's very hard. That's why you see the same assets recycled over the last 50 years and still not a mine. Ben, Andrew, these are geologists that I've worked with since my days with Barrick Gold. Both have master's degrees in geology. We also just appointed a guy named Jeremy Pfister, who's written his PhD in lithium exploration. So he's part of our team now as well in an advisory capacity. David Goodman's our largest shareholder and chairman of the company, co-founder of the company as well. So he ran a major asset manager in Toronto called Dundee Wealth and Dynamic Funds. Zach Goldenberg and Ray Harari are capital markets guys. A key guy here as well as Felipe Holzhacker. Felipe was one of the original guys behind Trek Mining, which was one of the original companies that became Equinox Gold. So if you recall a few years ago when Equinox Gold was formed, when was that, 2017, 2018? I think it was 2017. That was Equinox is founded as the merger between 3 different companies. So Felipe was behind Trek Mining. He was the principal and founder of Brion Minerals, which is the Brazilian company that we acquired. Very successful local mining engineer out of Sao Paulo. When you are a sub 30 million market cap, as of this recording, I'm about a 10 million market cap, give or take. I believe that when you're sub 30 million, that investors are often more so betting on the team, the quality of the team, and their ability to execute more so than the actual projects sometimes. I fully recognize that most investors aren't technical and they're often kind of just taking management's word. Now, this is my first business, right? I don't have a track record of making people their millions of dollars, but what I have done is I've looked at how much money did our peer companies raise at the peak of the lithium rush in 2022 and 23, and what did their investors get out of it in terms of new lithium mineralization, in terms of new discoveries made. So it turns out that the average cost of a new lithium discovery in terms of capital raised needed to get there is approximately $5 million Canadian, at least in Canada. So it takes $5 million in terms of capital raised to find lithium mineralization on a new project. In less than 1 year, with less than $2 million raised, we found lithium mineralization across 3 projects. 3. The inverse of this is what I'm calling discovery skills. So that's a number of discoveries per $1 million raised into the company. And as you can see here, we've done incredibly well. And I believe that a company's valuation, going back to what I said about betting on the management team, I think that we benchmark very well amongst our peer groups of companies. And there's been quite a lot of third-party validation on what it is that we've done and what we're doing. So we've won Discovery of the Year award for Northwestern Ontario for one of our lithium discoveries. That happened last year. So we believe that we're the right team for the job to be consolidating the sector. After I was a mining engineer, I went on to become a sell-side analyst. And I was covering the lithium space. I totally forgot that part, but it's an important part of my background. And getting that mix of good capital markets expertise with the technical expertise, especially in a niche metal like lithium, I think is very rare to be able to have this kind of expertise in one company. So I think we are the right team for the job. And lastly, I think we're the right structure as well. Because we stayed private during the downturn in lithium, we never had to do any of those overly dilutive or desperate financings, right? As a result, we still own half the cap table, basically. And to show our commitment to outside investors, that we've never issued a warrant. We didn't pepper the street with founder stock. This is a very clean structure of a company. 28 million shares are under the most restrictive lockup agreement that I've ever seen. The people that are subject to this lockup are myself, the Goodman, so Mark and David Goodman, Zach and Ray, and Felipe. None of us can sell our shares. So collectively, that's 28 million shares. None of us can sell our shares until there's a change of control transaction. We are riding this out for terminal value, is the message that I'm here to communicate to shareholders. That there's no cheap stock waiting to come back in people's faces. And the other part of our structure ties into the KoBold arrangement. So we're not even a year into this $33 million earn-in, and how it works is KoBold has to spend $33 million in the ground across 6 years, across these 3 projects to earn a 75% stake in all of them. Okay, and KoBold, as I alluded to before, there's only 2 public companies right now, to my knowledge anyways, that have an agreement in place with KoBold. So who is KoBold? KoBold is they've raised close to $1 billion, I believe, at a US $3 billion valuation right now. What's very unique about them is kind of their business model of leveraging AI and machine learning with the human intelligence aspect of exploration. And they've been able to attract some of the very unique a very unique investor base, or for the mining world, call it an unconventional source of capital. So the big VC funds out of Silicon Valley, such as Anderson Horowitz, but also the Breakthrough Energy Ventures Fund, which is the energy transition fund backed by Bill Gates, I think created by Bill Gates, backed by Jeff Bezos, Richard Branson, etc. So there's quite a lot of people backing KoBold, and because they're private, it's hard to get for retail to get exposure to KoBold. But what they could do is get exposure to KoBold's discoveries by investing in either Orion, which is a plus 100 million market cap company, or investing in Libra Energy Materials, a 10 million market cap company that is, less known about. It's also worth mentioning that when we are out there in the field with them, particularly at SBC, KoBold has retained us as an exploration contractor. So we're out there in the field with them, helping to execute on the program. KoBold pays us to do that. So during the field season at SBC, we're able to actually bring in revenue, which is very unique for an exploration company.
Are they the operator of the exploration project, and they're contracting you to do some help, but they're the one driving the bus, so to speak?
Yeah, so there's a joint technical committee, but yes, they are the operator.
Okay.
But our team knows how to operate locally, so we're there helping out there in the field as well. We also have some insights as to some local contractors who we would recommend, and it's been a collaborative approach.
Yeah, makes sense. Okay, thank you.
So a little lift under the hood as to how we think. This is purposefully an outdated slide. Right now we have 37 projects, and I know what people think, like, how do you manage 37 projects? This is how. This is kind of how we think. We rank our projects on geologic potential. What I love about lithium, and I wouldn't pursue this strategy in gold or copper, but for lithium it makes a lot of sense. Because with lithium exploration, you have a much better indication as to what you have earlier on in the exploration cycle. Exploring for it and being able to take it to the next level is much cheaper, typically, and much easier than exploring for, a gold project.
Can you just not too technically, but explain why is this? Why can you kind of de-risk a lithium project
Yeah,
sooner?
sure. So gold, for example, let's contrast hard rock lithium with gold, okay? So if you have a vein of gold, the host rock environment for gold there's several different types of gold deposits out there, right? For hard rock lithium, there's generally just one, at least one that's been proven to be commercially economic, which is pegmatite. You're mining, the host rock is called pegmatite. The specific gravity, the host rock of pegmatite is the same everywhere, give or take. It's about 2.7 is the specific gravity. With gold deposits, your SG can vary a lot. So if you think you have an idea of what the volume might look like, to convert it over to a tonnage, it's not going to correlate as well because they're all going to be very different specific gravities. The other thing about it is, if you like, gold is nuggety, so generally less continuous than a pegmatite. But you might have a grab sample that's like 1,000 grams per ton gold, and then one over here that's 1 gram per ton gold. Pure lithium mineralization occurs in a mineral called spodumene. So this is spodumene. It's kind of like a graininess to it. You see it within the pegmatite, and pure spodumene crystal has a maximum theoretical grade of 8.03% Li2O. So as a result, you don't get like variances in your average grade like you do with gold, or at least to the same extent. Like you might have a 10 gram per ton gold deposit, you might have a 0.5 gram per ton gold deposit. Generally, with hard rock lithium, you're looking at grades anywhere between 0.9 to 1.5% Li2O. Doesn't really vary much outside of that. If you were to plot up the true width of, and I've done this exercise, if you plot up the true width of a pegmatite intercept versus the resulting resource tonnage, it correlates much better than it would for like a vein. So if you're out there on surface, you see a pegmatite that's 5 meters, you could trace out the contacts, you can kind of get a sense, is this the true width? this is all before you drill. So if it's 5 meters here, you can think, okay, well, the tonnage isn't going to be that big. If you've got something that's 30 meters, now that's exciting. That's something that is scalable. To give investors color, most pegmatites or hard rock lithium deposits in Ontario are about 10 meters or less true width. The only exception being Frontier Lithium, which is a monster deposit. But most of them being drilled off are 10 meters width. So what we look for are widths of at least 30 meters. We believe that having at least 30 meters is kind of what you need in order to have 50 million tons of potential, typically. All empirical, of course. But that kind of analysis you can't really do with a vein of gold. It's just way too variable. So that was a long way of answering your question, but generally we look, you're able to quickly determine scale potential of the deposit based on how big the pegmatites are and how many pegmatites there are on the project area. If they're stacked and they can all fit into conceivably one larger open pit. The other thing is you can get an indication of what the grade is. Like if it's 5%, if 5% of your pegmatite is spodumene, it's not going to grade that well. If it's 20% spodumene, it's going to grade very well, closer to 1 to 1.5% Li2O typically. You even know how it's going to recover early on based on how coarse, how big are the spodumene grains. Bigger spodumene crystals, you can recover more easy with DMS or simple gravity separation. You don't need you can just grind it up to a gravel. If it's too fine grained, you're going to have to add in a flotation plant and you're going to have to grind it up. So your OPEX and CAPEX are going to be much higher. So the point I'm making is that you can determine the economics overall of your lithium project way earlier on in the exploration cycle than you can with most other metals. So when we chase deposits, we always chase something that we think has mine potential and has scale potential. The other thing we look at is explorability, which is if there's a deposit hiding there, how likely are we to be able to find it and advance it? As things kind of approach the bottom left quadrant, that's simply where we drop a project. We're not going to keep investing money into it if we don't think it has potential to be a mine.
All right.
So right now we are one of Canada's largest energy materials explorers and actually one of the largest ones in the Americas since we've almost doubled our land footprint by entering into Brazil. This is our Canadian portfolio. So we've got Waguchi, Nemiskau. This is where boots are on the ground right now in Canada. We've wrapped up exploration on the KoBold projects already. Toivo and Stimson are more going to be next year things. These are Stimson's kind of close to the Quebec border. It's near the town of Cochrane. So this is the asset that we got for 50 grand worth of stock. I'll touch on it shortly. There's 37 projects to go through, so I'm not going to touch on all of them, and I'll just flip it to questions. SBC is the award-winning discovery. We found spodumene mineralization over a plus 12-kilometer distance in the span of less than 2 weeks last year. That's why this won a Discovery of the Year award. The first thing we did after making this discovery is we staked what we believe is the most prospective ground in the area in our Toivo project. There's been a bit of a staking rush since. We've got, Fortescue, which is a large Aussie conglomerate mining company. I think it's like 50 to 60 billion market cap. Started staking around us. We've got KoBold Metals as well. They have their own project there. Flanders, this is a 3-hour drive from Thunder Bay. Ben and Andrew can do day trips and end the night being back home with their families. So it's named after the all-season Flanders Road, which transects the project area. And as a result of that, we name our pegmatites after Simpsons characters. So we've got the Nelson Tantalum pegmatite. We also have the Homer spodumene discovery. Still looking for the Fat Tony, of course. Stimson, Power Metals, last time I checked, this was like 130, 150 million market cap. More so catching a bid because of the cesium component. This red line is a major sub-province boundary. It's a major structure that is known to be associated with the pegmatites here at Case Lake. Here, back in the day, they were drilling for, I believe it was zinc. and they found a buried pegmatite. Um, and this thing, they weren't looking for pegmatites at the time. They weren't looking for lithium, but they noted in the historic logs what appears to be several stacked series of pegmatites with spodumene in it. So the next steps here is simply to go out there and twin the hole. And if we like what we see, we keep drilling. If we happen to find cesium in there too, great. That's a nice cherry on top. Brazil. Okay, so I love Brazil. The fact that you can go from maiden resource to production in less than 5 years despite COVID, it's a rarity. That's what Sigma Lithium was able to do. And the portfolio came with 30 projects total, 21 lithium projects. It also came with some other exposure too. So it adds for some nice optionality, other ways to potentially add value to Libra. But yeah, that's 8 graphite portfolios as well in Bahia State. That's where most of the graphite production in Brazil occurs. Also, is a nice cobalt project here. To find 1% cobalt in your during a soil sampling program that's a very high grade sample. Most of the projects are here in Borborema. This is kind of a we have what we believe is like an early mover advantage because most explorers for lithium are here in Minas Gerais, where our Penelope project is. So that's where Sigma is. That's where PLS or Pilbara is after they bought Latin. That's where Atlas Lithium is. That's where Lithium Ionic is. And where current spodumene production is in Brazil. It's in Minas. So we are exploring other parts of Brazil as well. Hoping to be an early mover here in Borborema, but certainly we are still looking at additional M&A opportunities, and we do currently have boots on the ground in Brazil right now as we record this. So look, that's a lot. A lot of pieces to the puzzle here, but I do just want to go back to the slide, re-highlight to people. There's an opportunity right now at the bottom of the market in lithium to be buying it on the cheap. We are the right team to identify those opportunities and execute. And I think that we're the right vehicle to pursue exactly that strategy. So with that, I'll turn it over to you, Martin, for questions.
You've got a lot going on there. Good presentation covering the macro factors. I appreciate that. I guess with so many projects on the go here, what sort of news flow should investors be expecting, or what are the near-term things you're working on, which would then presumably drive some news flow? And sorry, just to bolt on to that question, with the KoBold work, are you going to be able to how much of that develop or that exploration will you be now allowed to announce, or is that kind of in KoBold's hands to for what they permit you to announce and so forth? So I'll stop throwing questions out
Thus
now.
far, KoBold's been very supportive of our ability to press release results. The thing is a lot of those results are still in the assay lab. It's quite a lot of work they did over the summer, so we're just waiting to get the results and put it all out at once rather than doing it, piecemeal results here and there. We are also awaiting results. Well, we haven't even submitted them to the lab yet, but in Quebec, recall we just launched that program. I believe we press released that only Monday, a week ago. So that's the first time we've ever had boots on the ground over in Quebec.
Is that an actual drill program or more of a surface exploration program?
Surface exploration. It's like very much our first time in Quebec. But
Yeah.
again, with lithium, you have a much better idea of what you have early on in the exploration cycle.
All
And then
right.
we also boots on the ground over in Brazil. Now that we have entered Brazil, so Canada's great. There's a couple drawbacks, right? So prospecting is harder to do in the winter. Generally, field seasons kind of start in May and in October, usually. So with Brazil, and particularly some of the projects, like you can prospect there year round. Canada, you can drill year round, you just can't prospect year round. So that'll allow for year-round news flow as well. We've got a lot of results from a lot of projects that are pending, and I don't even know the results of all of them yet, right? So we do plan to release those and communicate those to the market. And on the corporate front, we are wrapping up our OTC listing. We hope to gain access to US investors. I think that the US investor base will be more receptive to a story like this in particular. Um, and that should hopefully add in more liquidity for the story as well. Also, on the corporate front, I can't really talk too much about it, but we are still always evaluating M&A opportunities. In fact, if anyone watching this video has ideas for me, feel free to send me an email or give me a call. All ears here.
Sorry, you're in Canada and Brazil right now. Would you contemplate US exploration, or are you just sticking to two countries?
We would contemplate exploration across the Americas. So yes.
Okay. Can you just, which projects are you drilling anywhere right now, or is it just, not just, but is it KoBold who's drilling and your 100% projects are all surface exploration? Can you kind of break that down a bit?
Yeah, look, we did put out a lengthy press release on KoBold's activities on these earn-in projects. The first year is really superficial work.
Okay.
Thus far, it's been superficial work, and they're big data collectors. They like to leverage their technology, and right now it's a matter of let's get all the information in, and then KoBold will see what they want to do with it. But ultimately, it's up to them if they want to poke holes at any of these projects in the next year, or if they want to do another field season first before drilling.
Right.
And then for us, our project Stimson is drill ready right now. Like the next
Okay.
logical step there would be to go poke a hole in it. There's other projects where it's like you could poke a hole in it, but there's some work that would make sense to do first. Drilling is the most expensive thing you can do, so it's best to de-risk any future drill program first as much as you can.
Hmm.
Um, I know investors really like to see quick returns and they want to see drills turn right away. But in my experience, the worst thing you can do is prematurely kill a really good project just because people are asking you to poke a hole prematurely. So Stimson is one where the next steps are to go and poke a hole there, which is something that we hope to do in the winter.
All right. And so that's going to be your first drilling is on that
Most
project.
likely. Most
Okay.
likely.
We're going to over the next through Christmas, I guess, get some surface exploration results out of some of your projects as well,
Yeah.
presumably or hopefully out of KoBold.
Yeah,
And
you'll have Quebec, you'll have the KoBold projects in Ontario, and you'll have projects in Brazil.
all right.
So a portfolio of assets where you're getting news flow from all of them.
All right. And then in the new year, presumably then that is when you could start the drills turning on
Yeah.
what was it, the Quebec project?
No, that's Stimson. It's in Ontario.
Oh, the Stimson. All right. Okay,
Yeah.
on that one. Okay. You talked about your cap table, which is pretty tight and pretty darn locked up. How's your balance sheet looking, and how far can
Sure.
your current reserves on that take you before you have to raise some more dough or find some more funds for exploration?
Sure. Look, if we wanted to, we can just kick our feet and stop doing what we're doing now. I wouldn't be doing these interviews. I would, just keep the budget to the absolute minimum to keep the lights on, and we'd be fine. Because we're sitting on about just shy of $1 million of cash, hard
Yeah.
dollars in our bank account. And we also have $2 million worth of a gold company called Athena Gold. So we're not in a bad position, and we expect the monthly payments to resume again next year. So we're really not in a bad, desperate position at all.
All right. And sorry, you mentioned Athena Gold. You have $2 million of shares in that company.
Oh
Is that
yeah, it's over $2 million worth of shares. We've got a total of just shy of 44 million shares of Athena.
Okay. Is there any opportunity or contemplation of liquidating that in the near term to fund exploration, or is that a sort of longer term hold on the balance sheet?
I think I don't think longer term it fits. It makes sense for a lithium company to hold shares in a gold company.
Yeah.
But there's no short-term plans to liquidate it, put it that way.
Okay.
Like it's still TBD what we do. Maybe eventually we liquidate it, eventually we distribute it to shareholders. I'm not making any promises there. It's all forward-looking
Yeah.
statements. But look, we did a deal with them and where we vended off a gold project that didn't fit in our portfolio, and my team also came in to help take over that company. And we're here to be supportive. We have to be. We are supportive shareholders, so we're not going to be blowing out that stock anytime soon. And when we do liquidate it, we're going to liquidate it in a way that such that it is not um, in their disinterest in Athena. So we have to make sure that ultimately Athena ends up benefiting as well. So maybe there's a block of someone big wants to come in. They don't want to be buying it up in the market, and there's no financing going on. So maybe that's where we play, work with, the buyer of that block and make sure that it's not at Athena's disadvantage, and it's not at our disadvantage either.
Koby, we've covered a lot of ground here, and you've got a big portfolio, you've got a clear strategy on how you're moving that forward. Um, I don't think digging down into too many of the details at this point make a whole lot of sense. You guys are doing the work and seeing where to cut and where to continue moving forward. So probably getting close to the end of this interview. Anything that you would like to highlight or anything that we missed before we wrap it up here? And if not, any sort of closing comments or final thoughts to leave viewers with?
Well, I'll just say this. Look, we went public in July. There was no concurrent financing. This was something that we decided to do and be contrarian because we think that there's an opportunity. And I bet you by consolidating the space right now, we're going to look really smart by doing this. And I guess my question to yourself, Martin, and viewers who invest in the space, with 37 projects, with a $33 million earn-in agreement with KoBold, with a portfolio of graphite projects as well. If you were to kind of take each one from a sum of the parts type of perspective, including our cash and marketable securities, I'd be surprised if anyone thought that it was less than our current market cap right now. So I do
Yeah.
encourage people to look at what's the sum of their parts, sum of the parts valuation for Libra, and where are we currently trading right now today. So I would just I would struggle if anyone really objectively, as a former analyst, I'd struggle if any analyst on the street looked at this and said, okay, this is a sub 10 million market cap story.
Yeah.
I don't know about you, Martin, but I think there's a lot more than $10 million worth in this portfolio.
I tend to agree with you. It seems to be a good deal here. A lot of value in here with all the different projects and partners, and clearly a good team you put together there.
Right on.
Koby,
Well,
thank you.
yeah,
I appreciate it. Great interview, great update. A lot to look forward to and seeing what kind of news you guys put out. Thank you very much. Appreciate your time.
thanks, Martin. Have a great day.
You too.